Ladies and gentlemen, the CEO of the world's largest derivatives exchange just looked the Trump administration straight in the eye and said, "If you touch oil futures, you're courting a biblical disaster." One sentence, one man, and the entire global economy just held its breath. Today, we're breaking down the story that could reshape energy markets for the next decade. Duffy, CME Group, US-Iran escalation. $172 million barrels already released from the Strategic Petroleum Reserve. And now the Treasury is reportedly considering direct intervention in futures. Stay until the end. I'll show you exactly how bad this could get and what you should do with your portfolio. Duffy didn't mince words. Markets do not like it when governments intervene in pricing. He called it courting a biblical disaster, and he's not alone. John McKenzie of TMX Group immediately backed him. Unintended consequences will be severe. Why are exchange CEOs panicking? Because they've seen this movie before. 1970s, 2008, 2022. Every single time governments tried to force oil prices, the market punished them harder. Just days ago, crude hit almost $120, then crashed below $100 in hours. Huge block trades appeared out of nowhere. Analysts are pointing fingers at the US Treasury, the same playbook they used in currency markets for decades. But oil is different. Oil is the blood of the global economy. And when the blood starts being manipulated, investors run. US-Israel versus Iran. Retaliatory strikes in the Strait of Hormuz, the choke point that moves 21% of the planet's oil. US already dumped 172 million barrels from SPR. IEA called for collective 400 million. Yet on March 11th, prices still jumped 5%. The market is screaming, "This is bigger than your reserves." Reports say Treasury Secretary Scott Bessent is actively considering selling near-term futures contracts to ease consumer pressure. This would be the first time in Trump's second term. Rapidan Energy Group says deliberations are already happening. If they pull the trigger, CME, ICE, all major exchanges will lose faith overnight. Investors will ask one question. If the government can manipulate oil, what else are they manipulating? Oil importing nations face recession. Inflation in Europe already at danger levels. China and India, two biggest importers, will feel it first. OPEC Plus, especially Russia and Venezuela, are watching closely. Andrew Ladd from Tradewines Energy said it best. Forcing the market creates a mirage of stability, but the fractures remain and will resurface with greater force. Every major exchange leader is saying the same thing. Markets are better equipped to handle geopolitical shocks than governments. History proves them right. 1971, Nixon shock. 2008, financial crisis interventions. 2022, SPR releases. All created bigger problems later. The message to the White House is crystal clear. Stay out, or risk a crisis of confidence that no SPR can fix. The world is watching. If the Treasury intervenes, capital flight, extreme volatility, broken trust. If they don't, oil may stay above $100 and push importing nations into recession. Either way, we are at a historic inflection point. If you want the next update the second it drops, hit subscribe and turn on notifications right now. Drop your thoughts in the comments. Should government stay out of oil futures? Yes or no? And if you found this valuable, smash like. It helps the algorithm show this to people who actually need to know. I'll see you in the next video because this story is far from over. Stay informed, stay ahead.